everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today, we're taking a look at the S&P 500. Now, the S&P 500, man, oh man, it had a heck of a start to the day. Overall, I mean, really, we're still stuck in the same range that we've been in for several days. We're just not able to get out of this range, and we recently just faded off of the highs. Now, usually when there's a little bit of a range, it has a bias, right? Whatever the move was going into that range is usually the sentiment of where the range is likely going to break out. So if you have counter trend breaks, it's more likely to go higher than you get these breaks above the high. And you can see how much it struggled up here before it finally got let go. Conversely, when you had the bounces down here, it immediately popped higher. Bounce down here, immediately popped higher. So going with that trend is really important when you're looking at these types of ranges. But today was a little bit different, right? We faded off of the highs of that larger range. They failed to make the high. They tried it again, made a new high, and then failed once again. And now this morning we gapped down. That's a big red flag, right? There's a lot of stuff going on to the downside that the buyers just are not going to want to see. Now, that doesn't necessarily mean they're just going to start exiting, but that could cause a little bit of a panic. They're going to be a little concerned about the way things are going, and they're going to be keeping a little bit more of an eye on it. So they're going to be more prepared to pull the trigger if they have to. We open up potentially a nice strong start to the day, right? Bullish candle closing on its highs, everything pointing potentially to the upside. They trap the buyers in and slam dunk them right straight down. Once again, another clue in our list of things that we're building for the downside. Not only are we failing off of the highs of the range on the bigger picture, we also just now trapped the first candle of the day buyers and shoved the stop right down their throat on the very next candle. Now, a lot of times that kind of candle, they may pull back into the next one, they may continue down. We need a little more information. And then we fire off with another huge bear candle down, closing on its lows, and then another big candle closing on its lows. We're beginning to see a runaway kind of market. You don't generally get those back-to-back-to-back bear candles without seeing a little bit more follow-through. And that's the anticipation. So sellers will begin selling aggressively in that type of scenario, expecting the market to keep going, right? We have downside monthly objectives, downside weekly objectives. There are a lot of things underneath us that will likely keep the market going to the downside for at least a couple more candles. So the first selling opportunity, a little bit aggressive, but comes on that drive lower, assuming that the buyers who've been in for a while are going to start exiting, and that's going to cause a fear run to the downside, and that's exactly what happened. Beautiful drive to the downside. Now here's where it gets a little bit interesting, because they actually missed that monthly support objective. They missed it by one tick, right? They missed it by just a little bit before popping back up. And that pop higher allowed the sellers to sell into the rally, assuming that it was going to finish off, and that gave a couple different opportunities. Aggressive sellers will sell into the bull candle, knowing that a bull candle closing on its highs after this kind of drive down, yeah, probably not so much. There will be more conservative sellers, though, who are maybe waiting for a slightly better scenario, and they're going to get in on this bear candle closing on its lows. But either way, both of them allowed the objective to finish. Now, after that objective did finish off, there was a couple little areas of interest here that I wanted to talk about. And this is something that we talked about yesterday as well, is market pressure. We had a nice bull rally to the upside. It continued going up, and there's a lot of bullish pressure. Notice the good, consistent movement from the buyers, and notice the lackluster movement from the sellers, right? The sellers are just nowhere to be found. They're not showing up to the party. Now, I have this marked. This isn't a sell that I would recommend, but it is a sell that I want to talk about because I am 100% sure that this trapped a lot of people. Now, what we're looking at here is a couple things. First of all, the bullish pressure on this is huge, right? The sellers are getting nowhere. The buyers are pushing the market up aggressively. I'm sure it looks like it would be about a 50%. So you've got the fib traders that are in this as well. You've got a lot of traders who are trying to sell this. And to be honest, if I saw a trader send me a screenshot saying, you know, hey, I took this trade, what do you think? I don't think it's that bad, right? I don't think it's that bad of a setup, but there are some levels of concern, right? When you have that much bullish pressure, you want to see them break down aggressively. You don't want to see a doji, bull attempt, bear attempt. You're just stuck in a little range. That's not good enough. You want to see them break out, then come back and drop lower. Now, again, I guarantee you, when I check my email a little bit later, there's going to be a bunch of emails saying this one trapped me, what could I have done to learn more from it, etc. And that's why I want to talk about this, because I know this will have trapped a lot of people. That's a beautiful bear candle, but we need to pay attention to the pressure. We have a huge amount of bullish pressure on our hands, and we ended up going into a range. For us to look to sell this with some confidence, we need to see it break down with some conviction, right? Not just a small little bear candle like this into this. We need a good breakdown, then have them come back and sell it from there. That will shake the confidence of the buyers enough to likely get at least attempt of a retest of that monthly support again. In this case, they didn't have it. So what would you do if you took this trade? Well, you have a short trade right here. You jump in, right? And everything is looking good. You have a nice bear candle, but then we follow up with a doji, a bear candle, no continuation. There's something wrong, right? It shouldn't take 30 minutes for the trade to go for a small little target, right? If your stop is above the high, your target should be about equidistant. Why is it taking so long for them to push off of an area that likely would have a lot of sellers in, right? You've got the fib sellers, you've got the moving average sellers, you have the swing high sellers. Everybody's stacking in the same place, and it's not going. You can feel them hitting that floor, and they just can't get through it. So when it starts turning around and you see this huge bull candle popping up against it, that is a big red flag. That is a sure tell sign that you are trapped. You were the one that got stuck in the trade. Now you have a choice. You can either take the full stop, which is probably going to happen, or you can exit early and maybe even reverse for a long and try to make the best of the situation given the context. That's why I have a green arrow here, and this is a trade that I would take given the context. It makes a lot of sense for buyers to jump in on this and slam the market higher to take out those stops. So a really interesting scenario of both psychology and technicals all kind of lining up with one another, and knowing where traders are trapped and using that information to your advantage can be all the difference that you need to have that one good trade if that's all you're looking for in the day. So hopefully you found this interesting. Hopefully you learned a little bit of something, a little bit of something interesting you can add to your tool belt. And as always, if you have any questions, you can send me an email at the bottom there, jbrink@slingshotfutures.com, and we will see you all in the next one.